What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, three things I want to talk to you about today. First up is going to be an overall market review. The jobs report was released early this morning, and by the look at the SPY charts, it really seemed like investors had a hard time responding to this. We're going to go over exactly why. Next thing I want to talk about is AMC consolidating still at this level. We've officially gotten out of quarter three, and there's something I'm going to be paying a close attention to as 13F's filings are going to start rolling through. They do have 45 days to report these, but I want to go over exactly just where we stand right now. And lastly, we're going to go over the one play that we absolutely crushed it today. I'm going to go over the news and the catalyst behind the movement of this play, how we were able to play actually both sides of it, and give you the full breakdown. All right, so let's get right into it. First off, jobs released this morning. Biden made the United States wait 90 minutes and he brushed off another poor jobs report. It was an absolutely massive miss. 500,000 expectations, only met 194,000. You remember August, they had expectations of 720,000, only 366,000 jobs added. This means two things. One, the fact that people are not going back to work, which is a bearish sentiment towards investors. They've pumped so much money into stimulus, and you've got individuals like us making money in the stock market where individuals are choosing not to go back to work, and that incentive isn't there. You also do have the unemployment that has dropped that extra 300,000. So I think that's why economists really thought that the number would be much higher. However, investors are also looking at this as kind of a positive thing because they know that Jerome Powell has stated they need the labor market to really recover strongly and get these jobs numbers back up higher before they talk about taper or asset tapering. So keep that in mind going forward. This is another green light. Go ahead. If we take a look at the SPY chart today, like I said, it was insanely choppy. Right away when the report was released at 8:30, you could see the dump going into it, then a little bit of a rip and another dump. And it seems like investors are like, wait a minute, it's bad that the labor market is really not recovering. It's recovering a lot slower than it should be, especially at this point. However, Powell said he's not going to start tapering. So therefore, we're going to continue this easy money policy. The bond rates are going to stay a little bit lower, and the Fed's just going to keep on that money wheel turning, which, like I said, is bullish for investors going forward. So we're going to see exactly where that plays out. If we do keep an eye on the 1 year, 1 day chart, which I did not make a video yesterday, I still have this trend line here. It looks like we might break through that, which would be another move to the upside or kind of hold against this and continue that slow trend moving down. And we still are going to have that 100 moving average acting as a little bit strong of support. All right, so keep that in mind. Next thing I want to talk about is AMC. As we are looking at it, we still do have about a half hour going into close. You could see the range 37.40, 38, 78. It's a $1.40 move. That range is just getting tighter and tighter. If you look at it on the daily chart, we're still at that consolidation period. Volume is very low. We're bouncing in between the 150, and like I said, volume today, and we still have a little bit of time, is just at about 26 million shares traded. One thing I'm going to be looking very closely to, and I want to cover with you, is this right here. I haven't covered this in a video in quite some time, which is the institutional ownership from Market Beat. If you remember quarter one, that's when the institutions really started piling into this. 370 versus 13, and back in quarter two, 119 versus 409 sold. Quarter three just started to roll out. We only have 53,000 right now, nothing sold. They have 45 days to report their 13F filings, and it's going to give us a good indication on what exactly happening. Somebody reached out to me in the group today and said, Jeff, what are your thoughts on the fact of AMC with this low volume? How are we going to be able to get that another move to the upside? Why aren't shorts piling in? The shorts are continuing to add to some of their positions, some of them, because a lot of them gotten burnt on this play before, and a lot of them aren't going to want to touch this, especially if they've already gotten out of this. And I'm talking about the very small hedge funds. But when you see a massive consolidation and there's no move to the downside on very low volume, because all those you've reached a heavy demand zone, and the shares that get into that zone just immediately get scooped up, that's when they're going to let it consolidate until it can make another move to the upside, or let them show it wants to move to the downside. So this $36 to $38 level makes me very comfortable. It reminds me of back where we were at $10, where we're just hanging out. Everything's calm, cool, collective. We get to learn more about the market, look at other plays, and have some fun. And like I said, just maintain very calm as we're staying in a very strong channel we are traveling into. All right, so that's the one thing I'm going to continue to look forward. Now let's go over the play that absolutely crushed it today. We had a couple of good ones. We had Grom. I talked about Grom getting over $5 would be a nice rip to the upside. That made about a 40-cent move, even right out of the way, just a few minutes, got about 33 cents. The next one I talked about was DATS, which I think got some sentiment from Zach Morris. I said it had that strong resistance at that 910 range. As you can see, looking into pre-market, it's very easy to see where your support and your resistance is. I said let it get above 910, look to go long on it. It didn't really happen out of the gate with volume at the beginning, and then he must have jumped on this thing. There was a little tweeting happening or something on the Reddit, which made this thing go all the way up to 1190. Had a nice quick move in the middle of the day, especially. Gotta love these moves in the middle of the day. That was a good one. Voyager was another one that was picked up by somebody else in the group. Rode this one all the way up. I did not catch this one, but that was a great play we had. And lastly, I want to go over this play right here. This one was absolutely phenomenal. This one was an FDA approval. Some people had picked this up earlier on at about that $20 level. I did not. But I had noticed that it had a really, really strong resistance at about that $37.50 to $38 level. And I said to everybody, don't add to this unless it goes to the top, because this is one of the plays when it's an FDA approval. It's like a, buy the rumor, sell the news. And we've seen this happen time and time again. And if you're newer to the market, or if you've been in the market for a little bit of time, you haven't been through FDA approvals, all you got to remember is CCIV, the rumors. Once that merger was approved and the acquisition was approved by that SPAC, it immediately tanked down. It was at like 60 something dollars. It immediately tanked down, and it's a sell the news. And I figured once that was going to happen, once we broke below, which would be the support, which is pre-market was holding at that $34 level, it would go all the way back down to where it was around the $31 level. I got out of it. Then something happened very, very trickily. And mind you, I will tell you this, I love to play this one because on Thinkorswim, I'm not able to short all of these stocks, these crazy biotech stocks, but this one I was. So I rode this one short down to $31. I saw a little bit of support and resistance pre-market at that range, got my gains, especially on a Friday, and wanted to leave it. And then a price target came out, and the first one was for $101, and then another price target came out, a $65 price target, and then a $52 price target, and then an $85 price target. And I picked this one back up right here around the 33.50 range, rode it up a little bit. I got out of it right before that break of that 37.50, which I figured might act as some resistance to it. Ended up getting back into it and rode it a little bit more to the upside and got out of it before 40. Figured that $40 was a very, very psychological level. But this just goes to show that one, and not everybody plays this, but the news of an FDA approval is going to get that massive pop out of it. However, sell the news. Remember that going forward. And the next thing is when you have multiple analysts giving massive price targets for this, it can be a very bullish sentiment to keep this price going up. Now, one thing I will say to be careful for is we've seen this actually just happened in one of our recent plays, XENE, is they want to do an offering because it's already up 100%. Remember they did this with AMC, I believe on June 3rd, when it runs that high and you have these companies that are running in the negative, they need more money for research and so forth, they might do an offering, which cause the price to dip a little bit. So I just played this one to be very short. I'd rather try to lock in some gains than holding it for long term. And if they do issue an offering and it does come through, I'll wait for that dip to be able to add long, because like I said, these price targets were absolutely monstrous. So wanted to cover that one. This one was an absolute home run. Everybody was just like, made my weekend, made the entire week. Able to play this both sides was absolutely phenomenal. So guys, that's it for this video. I'll see you in the next one.